Here's a highlight without going off our puke tool OPP that we do mostly, and it's just kind of a one of the fundamentals of trading. When you get into a situation like we did today, where the market opens up and is grabs a bid and is strong, you got everybody thinking, "Oh, it's bullish," and then out of nowhere we get this big break, and that first big break, when it's out of nowhere, you say, if you've been around long enough, it's going to be hard to go back up. And then, sure enough, it just continued to sell off another 25 points. And the reason is, when you get a sell off and a break off a nice rally, you got a lot of people offsides positioned the wrong way. Because of this first move up, you got people trying to buy it, getting long, and they all get picked off because it runs right through them. And then those longs picked off are the sellers that keep pressure on the market. Markets go down because longs exit their positions. Markets move, I've said this before, because of people exiting more so than people entering. It's the exodus that creates the emotion and the chase, and therefore the movement in price. So if there's a lot of longs wrong, there's a lot of sellers wrong, a lot of sellers who have to get out of a long, or they're sellers, and they're sellers because they're long and they have to get out, and that creates downside. But it's one of those things where you get it's not just any sell off out of, it's not just a sell off out of nowhere anywhere. It was on the backs of a pretty bullish move up that had the feeling of a grind open or a grind session every hour, were 5-10 points higher, 5-10 points higher, and then wham, this comes out, and it just shook things up, and it broke like 8-10 points. It broke another 10, another 10, another 10, end up breaking a good 30-40 points almost from where we started. So keep that in mind next time it happens. And it could happen on the other side too. We're pretty weak, and then wham, we catch a big bid, and it catches all the shorts offside.